Thank you very much. This is the RM of Springfield meeting agenda on April the 22nd of 2025. Financial plan hearing starting at 6:01. I'm Mayor Patrick Terrian. Just a little bit of house cleaning here. No hats and no video recordings. I want to wish everybody a happy belated Easter there. I hope everybody had a joyous time. I know I did with my grandkids. And I want to. I heard people in the audience talking about the Jets, so they're doing well, and hopefully they'll stay that way. But my Montreal isn't doing so well so far, but hopefully that'll change. So I'm Mayor Patrick Terrian for the rural municipality of Springfield. I'd like to introduce council. All are present. Deputy Mayor Glenn Fuel, Councillor Kaczynski, Councillor Miller, and Councillor Warren. And we'll call the meeting to order, as I stated there in the first presentation, or I guess will be the financial plan draft. And Amram he's our Chief Financial Officer, and he'll do a presentation. I guess we got the one overhead there to be working. We had a little bit of trouble with the technology around here today. So hopefully this will work out well. I don't think this one's working here, but it's on our screen. Yeah, the one I'm looking at is facing us. Yeah.
Okay, so welcome to the 2025 financial plan presentation. My name is Colleen Draper, CAO for the RM of Springfield. Next page. This presentation provides further information that supports the budgeted figures in the financial plan to help residents understand council and management's rationale behind the figures that make up the budget. Our mission is the rural municipality of Springfield provides high-quality municipal services to our community through effective leadership, fiscal responsibility, and safe, sustainable operating practices. Our strategic goals are maintaining a balanced economy, providing value for money, enhancing the spirit and safety of the community, protecting sustainable water and natural resources, creating infrastructure resiliency, and achieving good governance. Our guiding principles are accountability, transparency, fairness and integrity, lead by example, safety, public service, and teamwork.
We will now go through assessment and property tax mill rate information that supports the budget we're presenting. The first slide we have a table and a chart that shows the assessment of the RM over the years, over a 10-year period. In 2025, the municipality has an assessment of $2.015 billion. And the chart on the right of that slide, we have the assessment figures on the left of it in dollar value, billions of dollars. And then on the right, you have the mill rates. So we can see in 2025, the information on the table, we're showing a mill rate of a proposed mill rate of 9.677, which is a 3.16% decrease compared to 2024 mill rate of 9.993. 2026 will not be a reassessment year. 2025 is a reassessment year. Next slide, please. And then this slide is showing the tax levy, the portion of tax levy between the RM and that of the school divisions. The RM portion is 45% of the total taxes, and then 55% for school division. Next slide. And here we have a further breakdown of that. On the left-hand side of this chart, we're looking at the municipal taxes, 34%, school divisions, 42%, and the education support levy, 25% of the total for residential property. For commercial property on the right of the chart, you have municipal 36%, school division 40%, and education support levy 24%. Next slide. Now we'll go through some examples, property tax examples. For residential property, we have examples for 2024 for the same assessment value of the property of $500,000. Municipal school tax in 2024 was $2,773.13. And then the municipal tax was $2,248.42. In 2025, for the same assessment value, the school division tax is $2,681.10, and the municipal tax is $2,177.32. Now, these figures, they do not reflect the rebates, the education rebates. Those rebates, if they are factored, will further reduce the taxes that an individual will pay. The next slide.
No, he'll do his presentation. Then we'll have time. Then we'll have time to have the questions from the public. Go ahead, Amber.
For farm property, is 26% of the value of the property that is subject to property taxes. The same assessment value of 500,000 in 2024, school division tax, with using Sunrise School Division as an example, was $1,602.25, and municipal taxes was $1,299.09. In 2025, the school tax is $1,549.08, and the municipal tax $1,258.01. The next slide. And this is an example for commercial property. School tax was $4,000.62. Municipal tax $3,247.72. In 2025, for the same assessment value, school tax will be $3,872.70, and municipal tax $3,145.02. Now we'll look at the general operating fund. We have a summary here of our general operating fund showing budget values for 2024 and actual, and then the budget for 2025, and the variances comparing 2025 budget to 2024 budget. Total expenditure for this budget is $38,883,882. Of that, we have municipal revenue of $20,185,403, which is 51%, almost 52% of the total revenue or the total expenditure, because it's a balanced budget. We have other revenues, $12,990,702, and accumulated surplus, which is for deficit recovery on the 2023 audited financial statement, $1,121,609. The actual amount for the accumulated surplus, the deficit recovery, we can see it on the expenditure side at the bottom, is $935,143. But on the revenue side, it is 1,121,609 because there is a transfer from accumulated surplus, about 186,000 for capital projects. And then we have transfers from reserves on the revenue side, which is also for capital project, 4,586,169. On the expenditure side, at the bottom, we have municipal operating expenses, 20 million. And then we have fiscal services, the capital, which is 9,520,381. Those are for the capital items. And then fiscal services that includes debenture and other fiscal expenses, 1,214,887. Then we have transfers to reserves, 7,209,100. And then the deficit recovery again that cancels itself out. Next slide. Next, we have a pie chart that just shows the various components of our revenue sources. We have municipal taxes, which is the bulk of it, 50%. And then you have grant in lieu of taxes, 2%. You have federal government grant, 3%. Provincial grant, 18%. Other services, user fees, sale of goods and services, 12%. We have the accumulated surplus for deficit recovery, 3%, and transfers from reserves for capital projects, 12%. Next slide. We have a breakdown of the other revenues, which are made of user fees for like recreation, permits for development, building permits, plumbing, lot grade, etc., aggregate mining fees, recoverable costs from MPI for fire services, user fees for handy van services, and licenses. Next, we have a slide that also shows the categories of expenditures, what make our total expenditure. We have our operating expense that we've talked about, the capital infrastructure expense, the debt servicing, and then the transfers to reserves. The next slide. The next slide also shows a chart of the operating expenses, the categories. Operating expenses, operating services, 51%. The deficit recovery, the growing reserve, 19%, debt servicing, 3%, and capital infrastructure, 25%. The next slide also gives us further details of that, showing us the operating expenditure alone and the various segments within the operating expenditure. This does not include capital, it's just looking at operating expenses. General government services, 3,180,181 in 2025. Protective services, 2,897,935. Transportation services, 8,152,219. Environmental health services, 2,411,092. Public health and welfare services, 93,396. Environmental development services, 752,226. Economic development services, 932,712. Recreation and cultural services, 1,583,825. Our total operating expense increased by 7.4%. Next slide, Colleen.
So just going through each department, general government segment. Services include council and legislative services, CAO, admin and finance, HR, IT and asset management, independent annual audit fee, and the Manitoba Assessment Services Levy. We're seeing those costs increase 4.7% from 2024. There's a regular salary pay scale increases, budget for union negotiations, the annual audit fee increase in software licenses and IT related costs, asset management tree planting inventory program, and building insurance cost increase. For protective services, these services include police services, fire, facility maintenance, emergency measures, 911 services, animal and pest control, and building inspections. This is decreasing 0.7% from 2024. There was an elimination of the police service admin clerk position and a reduction in police services MPI funded overtime costs. Transportation services include road construction, dust abatement, sidewalks and boulevards, street cleaning, snow and ice removal, bridge work, and street lighting. Transportation service costs increased by 13.7% from 2024. We have salary pay scale increases, increase in road construction, including labor, materials, and equipment rentals, increased in dust abatement budget, increase for street lighting, traffic services cost increase, and there's an increase in drainage costs. Environmental health services include garbage and waste collection, municipal non-potable wells, and other environmental studies. Service costs increased by 7.4% from 2024 due to an increase in garbage pickup contract costs for tipping and tonnage fees. Public health and welfare services include cemeteries, handy van, and social assistance. Service cost increased by 1% from 2024. There was a small increase in wages for the handy van services. Environmental development services include planning and zoning, economic development, and beautification and land rehabilitation. Service costs decreased by 0.4% from 2024. There was a small net decrease in the legal expense budget. Economic development services include mosquito control, West Nile virus, destruction of pests, drainage of land, tax incentive grant, rural weed control, and water resources. Service costs increased by 6.7% from 2024 due to increased drainage of land costs. Recreational services include recreation administration, community centers and halls, skating rinks and arenas, parks and playgrounds, services to seniors, grants, museums, and the library. Service costs increased by 2.9% from 2024. The service to seniors cost increase in community services grants, and library building repairs and maintenance budget was increased.
Now we will look at the capital budgets and the breakdown of that budget. On this chart, we have this is a waterfall chart. On the far right of the chart, we'll see a blue column that shows the total of capital budget, 12,649,000. And of that, 3,130,000 is for utility, 30,000 for solid waste, 2,480,000 for public works, 1,570,000 for the fleet management program, 5,097,000 for recreation, 101,000 for fire services, and 241,000 for admin. And we will see the breakdown of this in the next slides. For the admin capital budget, we have network infrastructure upgrades of $51,466, purchase of land, $190,000, making a total of $241,466. The fire services capital, we have air bottles for $17,600, bunker and turnout gear for $42,950, pressure fan and pressure washer for 40,615, making a total of 101,165. The next. The next slide, we have the community services, recreation, and solid waste capital breakdown. We have the Springfield Community Center Phase 1 project, budgeted for $5 million for 2025 only. And the rest of that budget is on page 14 of the financial plan. And then we have works that should be done at the Hunter Power Park Playground, $30,000. Anola Community Club fence, $67,000, making it a total of $5,097,000. Solid waste capital, we have one item, the Hillside Waste Transfer Station, 6th bin upgrade for $30,000. The next, the fleet program. We have capital expenditure for leasing of graders, 4 graders and 2 excavators, $514,000. This was on the 2024 capital. We have wheeled load buckets, $25,000. 4-in-1 snow blade for wheeled loader, $40,000. 2 light duty vehicles, a carryover from 2024, $140,000. Fire engine, $480,000. A Tahoe police interceptor vehicle for $133,750. A new transmission case for a tractor, $85,000. A 0-ton mower for $153,000. Actually, there's a couple of 0-ton mowers for $153,000. Next slide. We have the public works capital breakdown. Survey equipment, $50,000. Illuminated crosswalks, $55,000. Active transportation program, $180,000. Bridge repair program, $200,000. Hard surface roads program, $1 million. West Oak Bank diversion, $200,000. Capital drainage program, $200,000. Railway culvert upgrades, $595,000. Next slide. The utility capital projects. We have Anola water treatment plant expansion, $50,000. Main Street water main expansion, $50,000. Anola lift station upgrade, $30,000. And the Dugald Oakbank water treatment plant, $3 million. This is an estimate for 2025 only. That project is also on page 14 of the financial plan. Lastly, we will look at the utility operating fund. We have the first chart showing us the makeup of the revenues of the utility fund. Starting from the bottom left, we have transfers from reserve for capital, 68%. Transfers from reserve for debenture, 4%. Water sales, 13%. Sewer charges, 12%. Other revenue, 3%. And on the next one is on expenditure side. From the bottom left again, transfer to capital from the utility operating fund grant reserve, 68%. Debenture, 2%. Transfer to utility reserve, 5%. Water supply expenses, 12%. Sewage collection and disposal expenses, 13%. And that brings us to the end of the presentation. Thank you.
Well done, Amram. These are excellent presentations as well. Any questions from council before we go to the public? Mark?
Yes, thank you, Mr. Mayor, and thank you, Amran, for providing good detail. I think this is the most detailed presentation we've had in terms of the impact and all the rest of it. But I do have some specific questions. It appears that 2025 is the largest change in assessment that we've seen, at least according to your profile here. I don't have a page number to refer you to, but on the residential property tax example page, which is about page 5, we have an example in 2024 of an assessment of $500,000. As you know, the assessment has gone up, I think you noted about 18%. So these numbers, I'm not going to say are intentionally not representing property, but if the assessment value of the property in 2024 was 500,000, in 2025, if it went up 5 or 18%, it would be more than 500,000. So what I'm trying to say is that the Sunrise School Division tax and the municipal tax would in fact, in your example, be higher because that house last year is worth more this year with the assessment. So in actual fact, it appears in the chart here that it's going down, but no house has stayed the same. So I would just say that a better example would have been 2024, the house was assessed or the property was assessed at 500,000. 2025 at 18% increase, it's 500, and I could do the math here. I guess it's closer to 600,000. And so how would that tax at the mill rate, both Sunrise School Division and the RM, impact it? It would actually be higher, not lower as we're presenting it. So if you could clarify that, please.
Yes, Councillor Miller, thank you very much. We've looked at this scenario. You're right, the assessment went up on average 18%. And it will seem that, yes, it will be fair enough to show an increased assessment value. So some of the consideration we have in showing the assessment the same between 2025 and 2024 was that because we don't know how the school rebates will affect individuals, we don't know the values. What we know is that the school rebates will bring down the total tax that an individual will pay for a residential property. So we decided, okay, let's stick with the same assessment value, given that even though assessment went up, but when the rebate comes in, it will bring taxes paid down. So that was the rationale for showing the same assessment value. And you're right, the assessments did go up as shown on the slide, 18%.
Thank you for that. But in actual fact, so the $500,000 property last year is 590,000. So never mind the school division, because that's of course out of our control. But for the RM itself, we've reduced the mill rate from 9.993 to 9.633, or about 3%, I believe. Again, what would be the impact? We want to, like, our residents want to see exactly, specifically, knowing full well that assessment is outside of our purview as well. It's a provincial assessment and we can't do much about that. But I want to take every effort, and I'm sure everybody on council here wants to take every effort to ensure that taxes are minimized and or reduced, not increased, especially when there's an assessment year. I think that's very, very important because, you know, we're the front line. We're going to hear it from residents when they see their property has gone from $600,000 to $700,000 or any example thereof. They're going to have a pretty significant financial hit on their taxes from the RM. Again, putting aside Sunrise, because that's a different day and a different debate, but the RM is what we control, right? So we want to minimize that increase.
Yes, Councillor Miller. And again, the rationale, because we've also discussed, we discussed this, the average increase, yes, is 18%. But again, not everybody will see that 18% increase. There are those who will see 18%. There are those who will see above 18% increase. There are those also that will see below 18% increase. And so we also feel like that is also something that is outside of the RM's control as to how people's assessments increase in value. So it's a little bit challenging we can give an example of a home value increasing by so much, but that example is still not going to fit everyone. I'm not sure if I'm making sense there.
No, I understand, but in all due honesty, though, I just wanted to reflect it right that with the 18% increase, I don't think there's anybody in the RM or very few who will actually see a decrease. In fact, most of us will see a significant increase. I had seen my example. But going to a different question, with the additional assessment this year, again by the province, not by the RM, because people have it sometimes not very clear. They think the RM has reassessed their property, and it's not, it's the province. So I'll blame them. But on the general operating fund summary page, again, there's no page number, so I can't specifically show you that, but there's, if I'm correct, last year's budget had 36,688,108 as actual municipal tax revenues. This year, it's expected to be 38,883, and in generality, it's going to be $2.2 million in additional funding that we receive. So we have to also realize that that's a huge amount of money that is a windfall, frankly, for our RM because of the assessment. So we want to make sure again that we're minimizing the tax impact for our residents. That's our goal. We have to. I know costs have gone up, and everybody's going to say inflation and all the rest of it, but we've got to be diligent and go line by line with a sharp pencil to ensure that we're not taxing our people to death. Like there's things that we need to, over the last year, as you know, I've pinpointed a number of expenditures that I thought were frivolous and ought not to have taken place. And I'll continue to do that because I think it's important. Those tax dollars that I'm paying on our property on Melrose Road I'm contributing just as everyone else in this community is. And so I have an impact. I have a job and some people don't. A lot of people are in fixed incomes and seniors. So I have to be respectful of that, right? That $100, $200, or $1,000 difference in their tax bill for the RM is significant. And I want to make sure that we can cushion that and minimize it as wherever possible. So I know the burden is on you to do that, to work with each department. And I'm sure that what efforts have you taken to ensure that every department is sharpening their pencil to the T and cutting costs and being competitive? And how do we reflect? Another final question is, how do we reflect to other RMs? Again, I don't like comparing apples to apples all the time, because if there's a bunch of bad apples, it means that we can be a bad apple too. And we ought to be the shining light that can do things the best. We are the largest RM. We have the opportunity to do the best we can. And we should be number one, not just within the pack, so to speak. So how are the other RMs doing in terms of comparison, just as a aptitude or a comparison?
Well, before I answer that, Councillor, if we look at the budget this year, most of the departments, they have had very minimal increases on their operating expenditure. There is just one department where we see significant increase, and that is the Public Works Department. And this is because of, over the years, we've been holding that budget mostly steady, and the costs, they caught up with us. So we saw that the 2024 financial year, the Public Works budget, the actual figures, they skyrocketed significantly. So we had to adjust that budget upward. For our road maintenance, drainage, and those items. So that is why the operating expenditure increased. Yes, the assessment value has gone up, and yes, there is an increased dollar amount coming into the RM, like you mentioned, about $2 million plus. But again, the RM has significant capital expenditures that it is looking at. As a project in consideration is the Springfield Recreation, the community center, which council and management believes this center will affect the lives of our residents positively. In Manitoba, we have long winters and they're cold. Having a community center in winter where residents can come in and have physical exercise and spend time, it's important. So some of that extra money, it's going to cater for capital projects. In terms of comparison with other municipalities, it is my understanding, I don't know the final figures. I just understand that there are some municipalities that have considered reducing their mill rates, and some, I think a few that I heard of, they increased their mill rates, but I think it's different across the board. But some of those municipalities also, I understand, that have decreased their mill rates significantly. They've abandoned some of their capital projects. So this is the complexity that is involved. Did I answer your question? Yes.
Any other questions from council? I just want to reiterate, Andy, did you have a hand up? If you don't mind, I'll go ahead here. Just response to Councillor Miller, I just wanted to congratulate our administration, and we've had many meetings with regards to our budget there. So we have gone literally line by line with our managers and had long meetings with them, and we've been going on this for quite some time, for months, in fact. So the process is ever evolving and it's dynamic, and it's a real life document. So when we're looking at this, we're having projections going into our budget discussions there. And I know Public Works was looking at another piece of equipment there, and through our discussions, they decided not to go ahead with that because of the expense. And that's our biggest increase is the Public Works, as you can see on our financial plan there. And the Public Works is the highest there with regards to equipment next to the fire. And we won't make shortcuts on the fire. We're getting 2 new fire trucks. One's being paid for by grants to the province. And we've saved up for that. So we've done lots with regards to the saving in there. And so the managers are scrutinized at all times there. So this document has been going through the mill, and we've been with council going through all the expenses there. And we have brought to attention some of the impacts there. And with that, this is our discussion that we've got to, and to the point that we are now. That's it. Councillor Kaczynski.
Thank you. I want to point it out that we're getting increases on our taxation for the residents through assessment, and it's done by the province. But we have to be mindful that if the province not going to make those increases, and that might happen like in probably next 2 years, then what are we going to do? How are we going to manage our taxes if we just increasing everything because we saying, oh, province did that, province did that. Well, how are we going to manage ourselves, not being, reliable on the increases done by the province? And what's going to happen if we have this capital expenditure in our, on our rec center and water treatment plant and lagoon? It's going to be tremendous increases for our taxpayers. And so we have to take that consideration because, gravy train not going to be always coming to us from the province. We have to rely on ourselves and be self-sufficient. Thank you.
Thank you. Any other questions? Deputy Mayor?
I'd just like to express that tough decisions will have to be made then when that happens. And at this time, we are getting grants. I don't foresee them shutting the door on us totally at this point. Again, everything's in flex right now. Once again, is we've, like the mayor said, we went through this many, many times through meetings. I can tell you that we started at a higher number. We've lowered that number 2 times for sure, minimum. throughout the process, and we're doing everything due diligently to get through this budget and make sure it's sustainable for everybody. And as Councillor Miller stated, assessments are going up. There's no question about it. Our houses are worth more. So again, it's just all in flex and making sure that the budget is in the needs and the wants that are needed for this RM. And that's called good planning, in my opinion. It's not poor planning. Good planning gets us through these things, through the tough times and the good times. Thank you.
Thank you. Then we'll open it up to the, Amram, go ahead.
I just wanted to make a point, given that I have knowledge about this and experience. When it comes to the assessment, we all know it will continue to increase, except when something extraordinary happen in the economy, and then maybe property values will go down. But when it comes to the education property tax, because I worked for the province and I worked as part of the education funding model, Manitoba is one of, I think, 2 provinces in Canada that still charges education property tax, because we did extensive research. So the province was looking at eliminating the education tax, which I think we are all aware of. So I believe if the province gets to that point, school taxes will be off property taxes completely, and that will bring down the taxes that residents pay on their property taxes. I think that should be the goal. That's what the province should work to achieve. I just wanted to state that.
Thank you, Amram. Then we'll open it up to the public. We've got a sheet here for people wishing to make presentations. I'll just go down to the first person here. That'll be Daniel Page.
Okay, good evening. My name is Daniel Page. I'm over on Pine Ridge Road. So I'm going to be commenting as a resident tonight. So I was looking at the documents that were given to the public prior to the meeting. And I don't actually want to look at the bigger picture things at the moment, because I feel others will probably want to talk about those things. Instead, I want to focus on actually just a couple. Technically, one of them actually was addressed in the presentation. But I'll talk about 2 of them. So I had namely 2 concerns, so things I can actually comment on as an expert. So I was looking, of course, there was a discussion of the increase of IT. Namely, I was looking at line 1220. I noticed that there's an increase in costs, and at least in the presentation, it was noted that there was license fees and potential, it was IT infrastructure, right? I was just wondering, so because I was looking specifically at the, not just 2025, but 2026, and it looked like an over 50,000, like about $50,000 increase. And I was just wanting to get some clarity on exactly what would require such an increase. I wanted to know, because software, remember, software is you pay for what is encoded on hardware, and is often carried by the brand. And often there's lots of alternatives for software, such as open source, that are cost zero. And I don't know what software the RM is using, but I'm just saying that if things are increasing in cost, typically you look for alternatives to lower those costs. But I just want to know more about like what exactly IT related is attributing to the projection for 2026 of about $50,000. That's the first point.
So the IT capital expenditure, the IT staff has been doing upgrades on our servers, and so it's hardware as well.
Got it.
That is the capital expenditure, and that's been going on for like 3 years in a row. We have servers in multiple buildings that upgrades have been done on, and there are some other IT stuff.
Okay, that clarifies that. Second one. So the one I mainly wanted to talk about, seeing as somebody that has gone to conferences and done things of that nature, is line 1320. So that is count for council, conventions, delegations, supplies, overhead. Now, it's worth noting already that the actual in 2024 was over $130,000. And it was budgeted for close to $190,000, but the budgeted amount is still relatively high. And I'm just speaking more as an academic who usually pays out of his own pocket for conferences and often secures his own funding, at least in a professional role. It seems like that category is very high and it's projected to significantly increase. In fact, if you look at the projection for 2026, it's close to $200,000, sorry. So I want to know exactly why it's already so high and why is it being projected to increase so much?
So that amount you're seeing there's a breakdown of it. So council, we have council budget. It's not just the convention.
Yeah.
So there are costs that we incur that are also factored in there, and I can give you examples of those costs that make up that amount, that it's not just for conventions. So within the council budget, for example, you have membership fees that are paid. Obviously, there is costs like registration fees for conferences and reservations, but also there are other costs that are allocated, like hydro costs. They are shared across the board.
Okay, so
across
that
departments.
so that includes also like utilities as
Yes, it
okay.
includes administrative costs as well.
That's-
But then it is just shown as a one-line item on
Yeah.
the financial plan there under conventions.
Okay.
Yes.
Yeah, so I want just a recommendation, just if conferences or conventions cost or that cost seems to be increasing, I would suggest you do it less regularly. But other than that, I just wanted to note, because already the police section was already addressed in the presentation. Thank you for that clarity. I just wanted to note just to conclude what I have to say here, is it just seems like a lot of items are prioritizing things that aren't community oriented, and they seem developer oriented or government admin oriented. So I just have concerns about that. But that's all I have to say.
Okay. Questions from council? Councillor Miller?
Thank you, Mr. Mayor. Thank you, Dr. Page, for your insight on this. This is something, a line item that actually I'm very sensitive to. Council going to different conferences and conventions and stuff. I believe very strongly that it doesn't need to be delegated that every member of council needs to go to a conference, because first off, we all have to pay, or the RM has to pay on our behalf, registration fees, plus our travel, plus our per diem, plus our food, plus the hotel, plus whatever else comes with it. So I think it's a little bit excessive. I've talked to representatives from other communities, including and Councillor Kaczynski, you and I have talked extensively to members of council at our meetings, and they often just designate 2 members of council, or maybe even 1, because that person is then responsible for bringing back the information to council in detail. In other words, they're our representative, not only for council, but for the public, and to bring that information back, not just to say random things that, oh yeah, it was a great conference, there was 800 people here, and la la la. But in fact, what impact and what did we derive, and what benefit will there be for our RM to have that representative who we paid our tax dollars for to be there? So I opt out of going to a lot of events because I entrust, whether it be Councillor Fuel or other members of council, to bring back the information for us. I don't need to be there. I don't need to hover and to sure, there's sometimes multiple side events in these conferences, but you know what? They're held every year, sometimes twice a year. So reputation, there's other councillors and other municipalities that bring back information too. So I sharpen my pencil on this one, and I opt out not to go to conferences because I think it should be definitely for us to be there, but it doesn't always have to be me. It can be one of the others who represent us well. Thank you. So I suspect you feel the same.
Okay. I'd like to talk with regards to that. There is an expense there, but that said, there's also an evolution when you're there. You're learning a lot, and I do the reports up there and I send it back, but it doesn't do the justice there. You got to be there to vote as well. You got to vote at the AMM. Who's going to represent the province? Who's going to vote our district here in the RM of Springfield? And we assess who that. You can't vote online. You vote there. And these are very strong resolutions that are coming forward. And then you can talk at these. The national one is called the FCM, and there you can talk about national matters that are intricate from across the border, east and west, north and south there. So you get to know all these people. And I'll use the example is that I met the councillor, the consul general for the government of Japan, and just talking and literally having a beer with him, and got his card, and so I've had some contact with him and open up avenues there to bring some. Like I'd like to see. It's not me. It's a council decision. It's for the RM, betterment of the RM, where we could have IT areas and you're an IT guy, an IT area within the RM of Springfield. What we have for industry is excellent. We work with the Chamber of Commerce quite closely there. Having those contacts is excellent. So having these contacts is essentially much of what we do there. I've met the ministers. I've met the premier. I've met the ministers of federal and provincial governments, as we all do. But the main thing is that we're voting there as well, and we're having classes, and we're having learning sessions there, and we're building rapport with all the other RMs. Like I say, from coast to coast. I met the chief of a very small village near Gries Fjord in Nunavik Nunavut, and it's exceptional how the culture is. And how things work in the small areas there. I've had lots of experience in First Nations communities, 12 years with the mounted police and meeting in councils and so on and that. So I know all the culturals there. So this is what you're doing when you're going to the FCM and when you're going to the AMM. And it's not just one person. There's lots of councils that go in total there, and how they have their problems and how they deal with problems. So you're discussing all that, and it's not so much the meeting itself, it's the after part of the meeting. So there, I sound like a salesman, but I am. I'm selling what we do there. It's not that we sit back, drink beers by the pool. We actually go there and establish good contacts. I've got a stack that many of cards dealing with people, and they got my cards as well. So I go there and I lose probably 100 cards. I don't lose them, but I give them to people there, establishing that rapport. And I'd like to think I'm pretty good at the rapport building. Hope that answers your question. Cameron?
I just want to add something. I understand Councillor Miller's point, and he's right to think that way. If you're looking at reducing cost, the point I just want to make is that governance has a cost, and the cost of governance could be costs like this, convention, like bonding costs, or you can consider, they call it residual loss, or the cost of monitoring, which as an entity, we also, council appoints an auditor and pays that auditor to examine the financial statement. That's a governance cost. So in running an entity, you have to incur a governance cost. If you don't incur a cost that is appropriate, that is adequate, you incur another cost that is considered a residual loss, wherein, as Mayor Pat has also said, if they don't have the knowledge to back what they do, to make when they're making decisions that are critical, then you will incur cost in another way if they don't make the right decisions. So you have to find that balance. But I think we've even made some reductions, like in this budget, the mileage line, we reduced it by 8,200. There is a cost here that the IT coordinator had included in the budget to replace the councillors their laptops, and they are at the end of their useful life. So that's about $20,000 here. So in the council budget, it's not just the convention costs. There are other costs included there that relates to council.
Thank you, Mr. Page. And our next presentation will be Janet. State your name, ma'am, and we'll start 10 minutes when you begin.
I think that I'd like an explanation of why 10 minutes, because this is a very important public hearing. I think we've had municipal board hearings where they allow people to express their questions or positions on things without that kind of time limitation. I don't believe we're going to be having hundreds of people speak tonight.
10 minutes, we'll see how you go from there.
Well, I think too, sometimes the answers might slow things down, so I hope you take that into consideration.
Yeah, we'll ask the questions after. That's not part of your 10 minutes, though.
No, I'm asking questions between my presentation.
Well, try maybe to save them, then we can answer your questions after the presentation.
What's the point of having a dialogue with you if you don't remember my question and it doesn't come forward at that time with an answer?
That's a good point. Let's try to stick to the 10 minutes and let's go from there.
Oh, okay. My name is Janet Nylen. I live in Oakbank. I'd like to start off by thanking Councillor Miller because he pointed out my first comment. My assessment went up by 18.55%, and calculating my taxes with the proposed municipal mill rate, I didn't include school at all, my increase is just under $300. I will also lose about $900 in school tax rebates. This is almost a $400 increase, and it is not a result of proposed significant expenditure programs that will be financed by borrowing. I roughly calculated that the debt could add another 2.8 mils over the next few years, which is approximately 25% mill rate increase. This is all happening in a time of significant financial turmoil, and our lifestyles as we knew them are about to change drastically. I realize that Council has put a lot of time and effort into the proposed financial plan and have come up with a slightly reduced mill rate from last year. However, Springfield is fortunate enough to have assessment growth that adds approximately $2.5 million to your revenues. Reducing the mill rate, well, I guess it actually added about $3 million, and then by reducing your mill rate by 1.73 mils, it leaves you with $2.5 million that you are absorbing into your operating costs to finance inflation, etc. I would suggest to you that there is more room to tighten your belts, tighten your operations, to prioritize your needs, and to trim down the wants. Before I get into some of the financial record-keeping issues, I'd like to ask a few questions. One about recreation and cultural services. Page 5, line 8190, services to seniors. It shows over a $1.5 million over expenditure that I believe is a result from that SHHI project. You've previously said that Springfield is paying the cost for the project to avoid GST and recovering the money back from SHHI. And I believe that's shown on page 2 as a sales of service from recreation and culture, which is a $1.56 million over budgeted revenue. My question to Council is how much of that account receivable was outstanding at the end of December, and how long does the municipality intend to allow that debt without interest being charged on it to be outstanding?
I'll throw that to our CFO or our CAO.
So we're completing as we speak our 2024 year end. SHI, they're paying us their bills. And the last time we had just about $200,000 in receivables that I recall. But I'll have to check that number. But the funds that we're paying for the SHI project, as we pay their bills, we invoice them also
I get that.
immediately, and they send us the checks.
Well, that's the question, is how quickly do we get the money back? Because otherwise we're providing a different type of financing. I'd appreciate the amount at the end of the year, please. And I thought the year end was completed. You did a year end financial statement, I believe.
We're this week it's done this week.
Well, what was approved by council in March?
That was the PSAB financial statement.
Okay. Environmental Development Services, page 4, line 6100, and Sales of Services, page 2 of revenues, and page 2 from revenues. It notes that the actual expenditures were $180,000 under budget, but this year's budget is almost the same as last year's. This is the planning department, and I'm noticing that the anticipated revenues from permits, etc., and on page 5 from development levies, they're generally lower. Is this because development has slowed down?
The development levies is based on the estimate of the planning director, based on existing capacity that we have. So whether it's because developments have slowed down, I'm not sure about that. And I don't think so, because right now everything is being looked at based on the water capacity that we have.
Good, I'm
And
ready.
it is public knowledge that the RM is running out of water capacity, and that's the reason for needing the water treatment plants that will provide.
That's not the question right now. Like,
Okay.
how many building permits were issued last year, and how many building permits have been issued this year? To me, the numbers are not close to the 200 REUs that council is using as the basis for the need for water and sewer expansion.
But the 200 REUs is based on having that increased water capacity. So right now, what is happening is based on existing capacity.
But it's not reality. I'm going to move on. I'm going to lose my time. I won't spend more of my time on the capital budget other than to reiterate to borrow $80 million over the next few years is, in my opinion, irresponsible and not keeping the best interests of the taxpayers in mind. Tonight we had a fancy presentation, but I'm quite concerned with the credibility of the financial documents that you've provided. We did only have 7 days. I might have talked to you personally, but I didn't. The office was closed for 4 days. It was Easter, and so I did most of my work today. So can you explain what will happen to this draft financial plan presentation after tonight?
So as I mentioned, we're wrapping up our 2024 year end. So the actuals that we are showing on the financial plan right now for 2024, those will be updated once we're done with that work. That is what I know will change. But the budget, I do not anticipate any change. If there is any change, I don't anticipate any significant change at all. because the budget, like we've said, the operating side, it's all, if you exclude public works, then it's just a small increase on the operating budget compared to last year.
Excuse me. Well, last year, between the financial plan and the budget that was approved, I found about 15 changes. Most of them, and that doesn't include the totals of the amounts. I think some of them were housekeeping ones. I think some reduced expenses a little bit. But it's important for the public to know why any subsequent changes are being made to a financial plan. And although council feels that it's a draft document and can be changed, it must also be aware that if it makes any change that increases the taxes, they're going to have another financial plan hearing. I guess my next point is I'm concerned on page 8 how you're using the column allowance for tax assets. From my experience, this is not how it's appropriately utilized. You should not have a deficit. It usually is rounding up of mill rates to cover the costs. I'm going to go on. Can you explain the differences between the amounts in the financial plan under columns of budgeted and actual?
On page 1 of the financial
All
plan?
throughout the plan, there's some inconsistencies between budgeted and actual as you reported on the December 31st financial statement, approved by resolution 25006 on March 18th. That's been submitted to the province. I don't know why you would be changing that now. You said that when you do the one for PSAB, I don't understand the PSAB part, but you can maybe make changes afterwards. But right now, should they not be consistent?
So the way we do the financial statements, the December financial that we submitted to council that was approved, that one has the accruals for the year end, the bills, that's orders that were placed before the year end. But then after that, when we submit the financial statement to the province, then we do entries that are guided by accounting standards. And these are mostly estimates that are governed. So an example for what we have this year, obviously, an obvious example is like the amortization of fixed assets.
I know that you're going to get into the PSAB part of it, but I guess my point, I'll give you an example. On page 3, General Government Services, line 1212, Chief Administrative Officer and Staff. In the financial plan, it shows this year's budget is $894,208, and the actual is $829,834. In the December 24th statement that council approved, the budget shows $746,745, and the actual is $1,682,370. Like there's a difference of about $800,000. Can you explain that?
Between the 2024 actuals?
No, between the December 2024 year end and what you're showing as in the financial plan as 2024 budgeted and actual. Should they not be the same?
It won't be the same necessarily because we've made it clear when we present the financial statement in December, we're still not done with our work. Entries could still be made until we are done, until we close the 2024 financial statement and submit it to the auditors. We can make entries into it.
No, you can't. I mean, that's just not, I mean, the auditor will come and tell you what, you can say, oh, I missed this, I would like to adjust it. But somewhere we have to have some financial statement that means something. What's the point of them if we're not going to have reliable records? I'll give you another, like that to me is I'd like to know where that $800,000 went.
Well, Mrs. Nylen, let Amram answer that
I
question.
may have to look at, I may not be able to tell you exactly what transpired there. I may have to look at it and get back to you. But I'm saying the financial statement that we present to, that we presented to council in December, after that financial statement, we have still been making entries, and we're making entries even now to finish our 2024 year end. Because that financial statement is before our accounting standard entries.
Well, I've never heard of such a thing, but I'll go on because there's
So
a
I
couple
want
of,
to touch on something, please. I know you're running against time. So, for example, we have leases that were done, capital leases for graders and excavators. In that lease, there is an annual payment. There is a principal and an interest payment on the lease. At the end of the year, we had to separate those two. We separate the principal from the interest and account for the interest going into the operating statement and the principal going onto the balance sheet. So these are entries, and that is guided by an accounting standard. These are entries that we make after that financial statement.
and I can understand that, but I was talking about the chief administrative officer and staff, so that's not that.
I will look into
I'm going to
that.
skip over a couple of other ones because I think these last two are more important. I think there are more errors to your financial plan. Debenture debt charges for the utility, page 6, line 450. In the plan, it shows this year's budget is $170,130, and the actual is $22,924. In the December 24th statement, the budgeted was the same, but the financial statement was there's $148,000 difference. Now, this is important because you either paid the debentures or you didn't, but you're showing that they're not paid, and now that is going to affect your surplus, your operating surplus.
Yes, I can answer this one quickly. We did this one, so this again is because of PSAB entries. We separated the principal from the interest, and the principal amount is not captured. We did not change it for this presentation because this is what residents already have. These figures are what you were already made public. So that is something that's, again, it's part of the 2024 actual.
But
It's something I have to update.
But you had it in the December 24 or 2024 statement.
Yes, I will update it to include the principal again.
I don't understand why it's not in the financial plan. And I guess the same thing applies for the general operating fund.
Yes.
So in your presentation tonight, you're showing an operating surplus, but is that the operating surplus? I don't think so. You have to take out the debenture debt payment.
So we're working on our 2024 year end, ma'am. We will finish it soon. But that's why I mentioned we have to update
I'm
the
going to follow up on this
actuals.
because this doesn't it doesn't ring quite true with me that you can keep changing numbers and then just saying that as it goes on. Like somewhere we have to have a surplus or not. And then I can see the auditor coming in and saying, oh, you've got to adjust the surplus like he did when you found the deficit for the Springfield Road things. They came in and they told us it was $823,920,000 in successive years. Those are audit entries, right? So I'm very concerned that your numbers are not reliable at this point. And I'd ask council to not adopt this financial plan until you get the correct figures and numbers in front of you so that the public knows what our surplus was last year and why some of these numbers are being changed without any kind of explanation. Thank you.
Thank you. Amram, did you want to finish off anything there?
So what I would say, Mayor, this is regular practice for accountants everywhere. Year end is usually extended beyond the financial year. And we do make entries until the point where we can submit financial statement to the auditor. Once we submit our GL to the auditor, that's the point where we cannot make any other entry on our own, except entries that the auditor will propose that we make. So at the end of every audit, when the auditor goes through the financial statement, they will make entries based on what they have seen. So for example, the deficit recovery, or say a receivable that needs to be adjusted. And they will send us those journal entries, and then we make the entries based on their journals. We cannot make entries once we've sent the financial statement to the auditors, because they have to examine and report to council. So the year end is completed this week. We've already made almost all the entries. Even today, we made some entries. We've made entries for amortization of our capital assets and all that. And it will be updated on the actuals. I must also add that the financial plan that we present, the province, they have municipal services officers that review these financial plans. And after their review, and these are people who are well experienced in this, they do communicate to us if there is anything that they notice, and they will communicate to the CAO. So the province is going to review this as well in detail, and the auditors are also going to go through it. So they do it every year.
Thank you, Amram.
If I could just make one last comment to council, please,
Okay.
is that if this year end is almost done and going to go to the auditors, why not put those figures into your financial plan, and we'll have something that we can rely on? Because right now you're looking at a document that has holes in it, and it's misleading to you and to the public. Thank you.
I've just got to make a comment. It's not a question. So our CFO, Amram Bangura, I'm sorry if I messed up that name, Amram, but that's why I call you by your first name. That's fine, ma'am. I'm just a comment, not a question. His credibility is not a problem whatsoever. Amram knows exactly what he's doing. He's a financial chartered accountant. He knows that there's checks and balances and everything that he does, as well as Holly. We have total credibility in everything that he does. The word credibility came twice, and I'm not saying that you use it in a bad sense. It should never be part of a sentence when it comes to our chief financial officer. He's impeccable. He's extremely meticulous. He's constantly working on the computers, well beyond my capability, and with the CEO is always going through numbers, and the numbers are always coming forward at times there. And I know you had mentioned something about Springfield Road. I think you mentioned that last year. I think that was already answered, if that's the case, last year. I just got to make a comment that our financial officer, his assistant, and the people that work underneath Amram are meticulous, professional. They have to answer to the audit process there. We've never had a problem. Never had a problem. Thank you very much, ma'am.
I never once questioned him. I questioned the documents, just to be on the record.
Yes, I know you said the word credibility, but should never be part of that. That's what I'm saying.
Your documents aren't credible.
Okay. Councillor Miller?
Thank you, Mr. Mayor. And again, I put trust in the CFO in the document, but I also echo the concerns of someone known as Janet Nylen, who has an extensive background in financial management and operating municipalities. So I don't think it's right for us to discredit and debunk her questions, because I think they're very important for all of council. And I take a bit of offense at you being so defensive.
Well, I wasn't defensive, Councillor Miller. I was just saying I was supporting our CFO. Any other questions then? The next presenter is Where's my sheet? Oh, I got it right here. Edwin Giesbrecht.
Is there anybody online who I can?
First, council, before I begin the presentation, because we do have a PowerPoint.
Do you want that up right away?
Just a minute, I want to put a knee here. I gotta, oh, no, that's gonna crack down.
Would you rather sit?
No, this is fine.
Okay.
The,
Edwin, did you just want to sit and just move the mic down?
no, this is good here.
Okay.
The, first of all, before I begin, certainly I will be well under 10 minutes in my presentation. In fact, I'll be under 6 minutes. But I did note, and I am Edwin Giesbrecht, for the record. The AMRAM is it, if I'm pronouncing correctly. Made indication early on, I very distinctly picked up on school rebate, where you use that as an offset or a mitigation towards residents of what they'll be paying in taxes. And at the same time, while you put that in as a reliance, the expiry of the province coming towards the school rebate is fast upon us. East St. Paul has done some calculations and it is expansive and dramatic. So I would hope that you wouldn't rely on this 25 financial to in regards to the assessments in the school versus the municipal tax levy income to expect residents to rely on that comment, because that school rebate is being taken away and it's going to hit us hard. So that's just a point I wanted to bring up. If you could bring up that PowerPoint, Christy, and I'll just have to try and do the best I can here. The what I've got here tonight for you is, and I would say good evening to council, and I do thank you for the opportunity to share my opinion on this important public issue. This forensic briefing reviews financial management trends in the RM of Springfield from 2019 to 2025. And as an executive summary, I would just quickly say, let's begin with an overview. This analysis reveals systemic mismanagement, 12 major red flags, and reoccurring accountability gaps, each drawn directly from the RM's own budget documents. Slide. The first slide, by 2025, tax revenue reached 118% of total revenue. This signals unsustainable budgeting and a troubling overdependence on property taxes without diversification. Slide. In 2024, revenues dropped by 8.2%, yet spending remained unchanged. This points to a failure in revenue forecasting and a lack of contingency planning. Slide. Capital expenditures rose 68% since 2019 without a long-term affordability plan. That's a concerning trend. Slide. Transfers to reserves increased significantly, yet no public-facing policy explains why or how those reserves are to be used. Slide. From 2019 through 2025, the RM showed break-even budgets each year. There's no operational buffer, leaving the municipality exposed to risk, my opinion. Slide. Appreciating as draft if approved, in 2025 alone, over $1.6 million in utility reserves were redirected to capital spending without a supporting rate model or public consultation other than today's considerations. Slide. The venture costs now exceed 1 million annually and are still rising, yet no long-term risk capacity analysis has been shared. Slide. Some capital projects appear funded by both grants and reserves. This raises questions about financial tracking and transparency. Slide. Spending has prioritized recreation and development optics at the expense of infrastructure, roads, and essential services. Slide. The 2023 deficit, nearly $935,000, was not disclosed when it occurred. It's being absorbed into the 2025 budget quietly. Slide. Rather than reducing costs, Council plugged the 2024 shortfall with a one-time investment return, $680,000. That's not a sustainable solution. Slide. A 2019 road reconstruction project has no available records under FIPA. That violates transparency expectations and possibly statutory obligations. Slide. Slide. This chart illustrates how the RM has increasingly relied on property taxes. That level of dependence exposes the municipality to significant financial risk. This comparison reveals a steep buildup of reserves, even as capital spending grows without coordinated policy direction. Slide. Here you can see the divergence. Revenue falls while expenditures remain flat. This suggests a lack of corrective action when conditions changed. This slide shows that capital is now consuming over 30% of the budget, a major policy shift that wasn't transparently communicated. Slide. The internal offsets and authorization are for the forensic indicator. Internal offsets and amortizations were excluded to keep results clear and comparable. No amortizations. I'll respectfully conclude my remarks here. There will be no formal question period. These findings were drawn entirely from public RM records. If anything here is unfamiliar, I urge you to revisit your own budgets and begin the long overdue work of restoring accountability. And with that, I conclude, but ask that Council take particular notice to this presentation, and I would hope that through the CFO, that there would be a congenial rapport. Our mayor is very good at rapport, and I think the balance of council can be very good at rapport too. So I thank you, and given my situation, I'm going to take leave. So
Thank you, Edwin. I hope
You're
your knee
welcome.
gets better.
Yeah, me too.
Any questions at all, Mark?
So very quickly, thank you very much, Mr. Giesbrecht, for your presentation. And I know you're not taking questions, but what I will do is direct the questions to the CFO to provide us answers to your 12 red flags. So I'm not going to put you on the spot now, but I would ask that if you could address Mr. Giesbrecht's queries and his red flags, that would be very helpful to me as a councillor to see if there's sanctity to it and to actually maybe clarify.
Well, you can clarify to council. I'm going to take my spine and put it to certain clarities as well.
The rest up.
I do thank you for that. By all means, maintain your open question period on council's time. I'm not paid. Have a good night.
Thank you, Edwin.
Yes, Mayor. I want to clarify the point that Madam Nylen was looking at, because I just went back looking at the December financial statement that we presented to council. So there is the issue here. It's just the way the figures are presented. The 800 and something thousand you're referring to has to do with that deficit recovery. So in the December financial statement, it was added as part of, because the account line we use falls in that cost center where you have CAO and admin staff. But on this financial plan, the deficit recovery is shown separately on its own because it has to be seen on its own. So the December financial statement, the deficit amount was added as part of the CAO and admin staff costs. That's why it was 1 point something, but on this financial plan, it is shown separately. Am I making sense to you, ma'am? Yes, so that's the reason for that difference that you were talking about.
But you also had it in the budgeted column.
Well, there was a budget for it in the 2024 financial plan, which was for 2020. Remember, we had a deficit in 2022. That is the 850 something thousand. Then we had a deficit in 2023, which is what we are budgeting for now in the 2025 financial plan, because of the Springfield Road reconstruction. But the point I'm trying to make is the CAO and staff costs that you saw on the December financial statement that we presented to council, which was 1 point. I opened the December financial statement.
Well, I understand 800,000.
Yes, it was 1 point something million that I referred to, 1,682,000. It's because in that financial statement, the deficit amount was added to that cost center. But on the financial plan that we're looking at, we separated it because it has to be shown separately. Yes, Mayor Pat, I just wanted to clarify that.
Thank you very much. As Councillor Miller, you had comments. We have all the answers in your documents there. If you open up your last closed file, I guess it is. Those are all the answers here. And I guess for the public here, I'll maybe we'll give a copy to Mr. Giesbrecht there, or let him know. He had made a comment about the red flag overdependence on tax levy. Revenue reach 118%. These are the response from our CFO. Sorry, I'm taking the light away from you there, Amram, but I'll just read it. The RM's tax revenue of, I'm going to round these numbers down, of 20.1 million is 50% of the revenue at 38.8 million, excluding the municipal grant in lieu of 710,767. It is not 100% of total revenue. The 118% includes school requisition taxes, which the RM has no control over. And there's more in there, but that's essentially answer that question. Red flag 2 is a revenue forecast and collapse of 2024 revenue dropped 8.2% with no change in spending, a serious forecasting failure. Management response is a 2025 revenue decreased by 4.4% when compared to 24 or 2024 actuals. Actual revenue in 2025 could turn out more than budgeted. Less transfers to reserves were completed in 2024 than budgeted for. Red flag 3 is the unsustainable capital spending. Capital expenditures rose 68% since 2019 with no long-term affordability plan. Response is there are several major infrastructure projects being planned for and building up reserves as part of the long-term affordability plan. Red flag 4 is the unexplained reserve accumulation, transfer to reserves ballooned with no public-facing reserve policy. Transfer to reserves are necessary to save future capital investments. Example, fleet vehicles to maintain and improve the services the RM provides its residents. As I specified, we got 2 new fire trucks coming in, and we're paying one outright for writing a check for that. It takes 2 years for a build, almost 3 years. And the other one was paid by a grant. So we put that money into the bank, and now we're still saving for the next big expenditure for the fire hall. So zero operating surplus every year, 2025, 2019 to 2025 shows a break-even operating balance, no margin for risk. Springfield's surpluses appear to roll over year after year without being used for tangible long-term assets like culvert inventory. Surplus funds have mostly, the response, surplus funds have been mostly transferred to reserves over the years. I should put in there that we do have an asset management program where we're essentially putting down everything within the RM of value. So we know what is, if we had to go to the bank for a huge loan, we're worth $2.1 billion, which is extremely high. Utility reserves used for capital, over 1.6 million utility reserves used in 2025, no support and rate model. Management's response is the 1.63 million is not all coming from the utility reserves, 1.5 million from the capital water levy, and 130,000 from the utility reserve. This is for the Dalles water treatment plant. And the Dalles water treatment plant was, we estimated at 29 million plus. We've gotten that down through grants in our reserve funds, part of that reserve question there. We got it down to $8.8 million. And we are doing very well at that. We got money in the bank that's getting a huge amount of interest. So that number, 8.9 million, will be drastically reduced. So this is how it all works. It takes a 4-year cycle. Red flag 7, rise in debenture burden, over 1 million in debt charges yearly with more borrowing plan, no public risk analysis. The answer, the RM's debenture payments have steadily decreased over time, as some debentures have matured and fully paid, and the RM's tax base increased. Debenture payment in 2023 was 1.3. It's in 2024 it's 1.17 million. These are all $1 million, and now it's at 1.08 million in 2025. Grant and reserve double dipping. I'm not sure what he means with that. The project appears funded by both grants and reserves. Unclear reconciliation. Management response is sources of funds for capital projects include operating reserves, borrowing, or other sometimes multiple sources can be used for a fund project. Political spending on optics, spending priorities, recreation developments over infrastructure. Management response in investment in recreation is vital to improve and sustain a healthy community. Winters in Manitoba are long and cold. I think our CFO answered that quite. Red flag 10 is hidden deficit of 2025, 935,000 of 2023, 935,000 deficit in 2023 is absorbed into 2024 and not disclosed. Management answer that is the 2023 deficit was fully disclosed and reported in the 2023 audited financial statements. That's clear. One-time reserve plug of 680,000 and a one-time investment returns to cover shortfall in 2024. The surplus in 2024 was transferred to reserves. Missing roads and FIPA responses. So that's I don't know if that really requires an answer, but the FIPAs continue to be answered, and our records reflect that. So I had to put that on the record. Any other questions from council? I see none. Daryl, did you have your hand up? Okay. I'll get you to sign this after. What's that? Oh, okay. Oh, all right. I've got to go online and see if anybody has any questions, and I'll bring you up then, Daryl. Is there any questions online? I haven't got the screen for that, by the way. Unless somebody tells me, I won't see it. I don't see any questions.
Yeah, there is one. Leslie Ann. I got to unmute, and then if you can just, or she message you. Yeah.
Hello.
Ma'am, Mrs. Fuga?
Yeah, can you hear me?
Yes, if you can hear me.
Good. Oh, I don't know what that is. There, and I'm visible.
Okay, ma'am. I
Yeah.
think mute myself.
Pardon me?
Go ahead.
Okay, thanks. And this might be a bit of a follow-up to part of that last presentation specifically, and we went over the response to it really quickly, so I'm not sure that I quite understood it, but it was the relative focus on recreation funding versus infrastructure. And I think the CFO's response, if I understand, because as I say, it was maybe going a little fast for me to comprehend, was that recreation is a really important component of municipal service. And I agree. I think it's really awesome and good for our mental health as well as our physical health to have appropriate recreational opportunities. But I am concerned as to how we make the decisions on where the funding on recreation goes and how much that funding is and whether or not we're doing it on a need assessment basis or feasibility assessment. And I'm speaking specifically here about the Armtech facility that has been proposed and the borrowing bylaw that's being proposed. I've only just recently had an opportunity to start looking at some of the documents. And one of the ones that was of most interest to me because it's current to this year, just before the borrowing bylaw, was the recreation center business case. And I had some questions about that. I'm not sure if now is a good time to talk about those. But I guess specifically, I would want to say that in all of the documents that are there, which date back to the master plan, the recreation master plan in 2016, which I guess is a foundational document for the whole thing and has been bringing us to here. One of the key recommendations that was made was a kind of a detailed tracking and assessment of how the current municipal infrastructure with respect to recreation, community clubs, and soccer field, arena, etc., to what extent they're being used. And what I don't see in the business case is an integration of needs assessment data. Like I hear and see those things that talk about, we have a population and the population needs to be active and we have kids and kids need a place to do their activities. But I don't actually see a needs assessment or feasibility assessment that drives us specifically to the facility and specifically to the expenditure that we're looking to undertake. And I'm not sure how the $20 million loan is going to affect that debenture payment, on an annual basis. But when I look at the revenue projections for the facility that I see in the business case, there's a few things that don't make sense. So is this a good time to talk about that? That's my question. Can I ask specific?
I'm sorry. I'm not sure if you heard me there, ma'am, but it's Maritarian here.
Yes.
You got lots of questions with regards to the facility itself, and it's important to know all that. Our recreational director can answer most of that, and if what I'm going to tell you right now, I think I can answer them as well. But it's not gonna answer everything to the full detail. There, with regards to the budget itself, we have the borrowing bylaw for the 20 million, but like our water treatment plant, it's going to be reduced through grants, and then we have a very strong component of volunteers that are working meticulously here to reduce that as well. Plus, our reserves are going to be applied to that 20 million. The numbers we can break them down somewhere down the line. If you contact, I'll try to get a hold of you after the hours here, or if you want to phone tomorrow and ask for our CAO. She can give you every detail with regards to that, and then we can address that. As for the budget itself, the proposal or our budget here does put in there. We have a kind of an account, a file, I guess, for a reserve that we've already put money towards that, and we're hoping again to get back to reducing that number. Just like our water treatment plant, it went from 29 million, now it's down to 8. It'll be a lot lower than that by the time we start putting shovels into the ground. Now, I think you did ask a question with regards to the interior and what came about for us to have the facility that we have in print now. Would that be correct?
Well, not quite as specifically. I'm thinking about need. Like, I know that there are a lot of facilities in the community as it stands, and we can talk about the ones that are like community centers and that sort of thing, but we also talk about the schools. And when I look at the business case and sort of the minimum scenario of a 40% utilization rate of the new facility, I guess the first questions that come to my mind are, where do we stand now with the utilization of the facilities that we have in the community? And by what point do we expect to get to that minimum utilization rate? Because what I see is operating even at that minimum of a 40% utilization rate of the pardon me, I don't know what you call them, the various components, the gymnasium, the multi-purpose room, the indoor turf, and the walking track. We're going to be running a deficit even if we're at 40% utilization. So it's those kinds of details. I think I understand that we're not phasing the project. Is that correct? That
Yes, we are, ma'am. We're phasing it. The plan is the phase 1 and the phase 2. The phase 1 is these numbers. When you speak to Sean, he'll tell you the exact numbers. These are rounded off numbers. The phase 1 will be 20 million. It will not include the soccer turf. And that's part of the consultation process that was under review to see what our community wants. The 40% utilization rate, I don't know that number. I know it's a facility that's been in waiting here for 32 years. So it's something that this community of Springfield needs, and it's for aging in place. We're putting in a pool in Dugald at the Dougal Place, Dougal Estates, Dougal Place. So that's going to be a community initiative as well. That's going to be an aging in place, allowing our seniors, our youths to stay in the area here and do that kind of stuff with regards to that. That's part of the recreational plan as well, that we're trying to have aging in place. Again, I think a lot of this, ma'am, is towards our recreational director, and if you contact our CEO, she'll be more than happy to answer those questions. And if you need any more details, feel free to give myself a call more with regard to that. But I'm sure she can answer everything.
Yeah, and I think I will, just because, as I say, even when you tell me that the indoor turf is not part of the first phase, indoor turf actually makes up more than half the revenue projection. So I really have some concerns about how feasible this is when you consider what we are going to get for that money in comparison to what we have now that's underutilized. Yeah, I did see in the master plan, like, I have no doubt that people thought carefully about those things that they wanted to include. But what I don't see is the analysis. So thank you. I will follow up, and I appreciate your time.
I appreciate you reaching out there, ma'am. Thank you very much. Have we got your number and all that too, ma'am? Don't say it over the air here, but
no, I won't, but I will be in touch.
Okay.
You can count on it. Yeah.
All right. I thank you very much there, ma'am.
Thank you.
Minutes, Daryl, when you state your name.
First of all, I'd like to compliment you on moving this over here from over there. I think that's a big improvement. Name is Daryl Speer, and I have a couple of comments regarding this financial plan. I'm having trouble making sense of the allocations for Heatherdale Road. At 2024, it shows nothing. 2025, it shows 42,500. And that's all going to, that remains to 2028. And this is showing in the 2023 projections. 2024 showed that in this coming year, today, our year 2025, 42,500 again. Was anything spent on this project in 2024?
I can answer that if I'll give it to our CEO to clarify. We did have am I able to talk about that? Am I able to talk about the MTI? There was discussions with MTI. We are ready to go on the RM side, but we can't go because MTI hasn't got their money together for that intersection. So we have we're ready to go. We've done everything that we have to, but MTI they haven't got any money for their budget to proceed.
I'll just clarify, I don't think it's money that's lacking. They don't have the design, and they have some land acquisition.
I'm having trouble hearing you.
It's not that they don't have the money, it's the land acquisition that's delaying them, and they still have to complete the design this year. So the RM can't go ahead with our part until MTI has completed their part.
What's being contemplated?
While they're working out the design to make sure that they're not going to spend the money without fixing the problem. So
my question was, what's being contemplated?
I don't know the details. We haven't seen the final design plan yet.
Nobody on council knows? Anybody?
Whoa. Just address the questions to myself, and no, we haven't.
Well, I guess my question is, where does MTI play into this? That's the first question. I see that you've got projected for next year, 910,000. What is that contemplated for? That's considerably higher than the 42,500.
So once we know what MTI's plans are, our plan is to complete some of the drainage works along Heatherdale Road and to complete some road surfacing there as well.
So 910,000 is going to do it?
I think it's a 2-year phase project, so it'll be over 2 years. There's an amount in the plan. 3 years, sorry.
Looking at your budget, I see it as a 3-year project.
Yeah, I think it's 3 years that Public Works has planned to complete all the, there might be some realignment involved in the roads, some road surfacing and drainage. So it's a long-term project.
To the tune of 3,510,000?
That's the estimate we have now, yeah.
And you have no details?
Public Works would have the details.
Can you get me those details?
I think Amram's just looking to see if we can get the details for you here. So the proposed project includes the reconstruction and alignment of Heatherdale Road, the establishment of new drainage infrastructure, and the reconstruction of existing ditches to improve surface water management. The work involves the installation of geotextile fabric and riprap where needed to prevent erosion, as well as the replacement and installation of culverts to enhance drainage capacity and extend the life of the infrastructure. The project will also include the paving of Heatherdale Road with an asphalt surface to tie into the MTI project at Garvin Road. The estimated costs are based on a Class D estimate and are subject to change upon final design. Finished surface to be determined.
Is there any reduction in the elevation of the road?
I don't believe they're talking about reducing the elevation, no.
I've heard that mentioned a number of times.
I'm
And-
not seeing it on their plan. Phase 1 is reconstruction and asphalt paving north of Garvin Road for 350 meters. Phase 2 is reconstruction and granular surface. And phase 3 is the remaining construction and granular surface. So they're going to be doing it in stages.
Well, my question is, considering the height that they're dealing with, I presume that that's going to be part of the package. And if so, what is the value of the aggregate that would be needed to be extracted for that project?
It's not broken down to that detail.
I would think it should be broken down because there's valuable aggregate there that should be part of the consideration.
I think
We have the road allowance and the whole incline there has been mentioned. When I sat on the aggregate task force, the discussion was that aggregate with public works would create a solution to that intersection, which is abominable, as you know, and it would be done with their equipment in the off season, and it would be a very reasonable resolution. So to me, this 335 million is a big jump.
3 million, you mean?
Yeah,
Sorry?
I was just going to clarify 3
Yeah.
million.
It's 3 million.
Pardon?
It's just under 3 million. I think you mentioned 35 million.
Oh, sorry. Yeah. Glenn, you're going to say something?
Yeah, I can add a little bit to that. As you know, Mr. Spears, this project has changed a fair bit through the province. There was a conceptual plan that was done years back, which included a lot of expropriation, which the province decided not to do. And I think right now is we're waiting for that final draft to come from the province to say, here's what we're going to do. And then we can get the final prices for what we need to do. But at this point in time, we can't do that until they do their part. And that's where we're at. So we're doing the best that we can with the information that we have at this time.
Well, just to refresh your memory, you remember sitting on the task force, that was the offer that was made. It was independent of anything the province was doing to the balance of Garvin Road. It was focusing only on the intersection, none of the other aspects. Okay?
Yeah, I agree. Having said that, though, we're still waiting for that final decision. Thank you.
Okay, I'd like to move on, and that relates to the oversight of gravel operations here in Springfield. What's going to be allocated to dealing with the issues that we're facing that have been brought up numerous times in this council chamber and otherwise to the police. And that relates to lack of site control, a lack of drainage off the sites, Katsura being a case in point. I think you're well aware of that, Glenn. And the issue with trespassing, abandoned sites that are just a welcome mat for all sorts of trouble. Refuse disposal, partying, stolen cars. It's on the police report, it's on the RCMP reports. And according to bylaw 7322, which is our standing bylaw, we're supposed to have, the sites are supposed to be secured for operational pits and pits that aren't operational for whatever reason, in a layover. But for those that are abandoned, we absolutely got to be doing something. And I think we should have resources allocated to that. And the expense that we as taxpayers are investing in this should be recovered from the operators. And that's been mentioned before. And I think it deserves mentioning again. The other thing I want to talk about is source water protection. Today was what day?
Earth Day.
Earth Day, yay. Yes, at the legislature. Probably 300 people out there. It was amazing. School kids from, toddlers all the way up to teenagers. Very impressive, very well done. So I think we need to look at it as, okay, what are we going to do for World Care Day in Springfield? I would say we should start with some of the eyesores that we've got happening in Springfield. Those aggregate operations that are there, unsecured, not being attended to, open to all sorts of abuse. And I think we should be working on a plan for that and putting resources towards it as well. Because those areas are actually our source water. The rain comes down, it filters through the aggregate into the carbonate, and those who draw water from the aggregate, they depend on that. Those who draw water from below that, guess what? They depend on that. So what are we going to do to resolve that? It should be in the budget. Now, it was talked about before that we would have a strategic environmental assessment, SEA. This was brought up by the task force. It was promised and passed council's review, and we have yet to invest a single dime in that, to my knowledge. And I've been back every year talking about this. Would you not say that was the case, Councillor Fuel, CAO? And what has happened? Do you have anything to report to me? I'd like to hear it.
You've asked it repeatedly, and I think we responded repeatedly. Aggregates is responsibility of the province to inspect the aggregate industry there and going below the water and so on like that. So whatever we answered before is not going to change now.
Just read bylaw 7322.
Pardon me?
You read bylaw 7322. It deals with that. There's to be inspections done. There's to be penalties leveled. Water open pits are to be labeled as what their depths are, et cetera, with penalties.
And the province is supposed to inspect that.
No.
They have the one inspector.
That's up to the RM of Springfield. Sorry. Read your bylaw.
Okay, I'll review it. But
Yes.
that's a province that's responsible for that.
Well, I can tell you this. I made a report of what's happening in one of the pits. One of the operators, I put it in front of your manager of water and waste with picture, and it was submitted to the mines department, and he was waiting for an answer back. The next time I went in to ask about it, he said I had talked to CAO. I asked for the CAO to give a report, nothing to report. I asked for any documentation related to that, to the manager of water and waste, the picture. Nothing could be provided back to me. I even provided this in front of council.
Yeah, I remember that.
And you couldn't produce that for me. It's like I didn't exist. The problem doesn't exist. That's not right.
I don't know what to say to you, Mr. Speer. We've already been through this, and it's up to the province.
It's time to do something.
Well,
This is
what more
world.
can we do?
World
They
Day.
have one inspector for this region there, and they should have 5. But that's a provincial issue. Maybe you should contact the Minister of Mines.
We've talked to mines through Phil Pollock, but nobody will give me an answer.
Sometimes
This is your responsibility. Your manager of water and waste, that's their department. Your CAO's responsibility. Your responsibility as mayor. Yes.
Thank you. Thank you, Mr. Spears. Anybody online? Anybody have anybody online there? I don't see anybody online. And we're done through this presentation list. Any questions from council at all? I see none. Mark?
Thank you, Mr. Mayor. I just want to go back to the presentation from Ms. Nylen. She noted that the capital budget for the future will be upwards of $80 million. Do you have some details from the CFO? The projection, is that an accurate figure? $80 million going forward?
So going back to your question, Councillor Miller, I'm not entirely sure what the 80 million is about, but this year's capital budget, 2025, is a total, including utility, of 12,650,381. And then on page 14, in terms of projects that are being considered, the three big projects, the Dows project, which is the water treatment plant, the rec center project, and the regional waste water treatment facility. We've shown figures there. Again, for the two projects, the Dows and the Springfield Community Center, we have borrowing bylaws that have been passed by council for those projects. And if we could recall, the Dows project, we had a borrowing bylaw of 12,563,000 that was passed. But now we're looking at borrowing of $8.8 million. And then the rec center, 11.9. What we're seeing there for the lagoon, the regional wastewater treatment, is just an estimate that is presented to us by the utility director. And that project's funding, the necessary funding, they have not yet all been fully identified. It's a work in progress. Then if we go to page 14, we're showing our 5-year capital plan, showing a total of 141,957,027. This is management's best estimate at this time. It's 5 years. You can consider that a medium-term horizon. Some of these projects will be undertaken. Funds will be identified, reserves, grants, but some of them may not be undertaken within that 5-year period. So this is a plan. It's to guide management in their decision making. For example, we have 2 projects under public works on page 14. That is the Growth, Renewal and Opportunities Roads 1 and 2. That grant applications have been submitted for those projects. If those grants are approved, then those projects will be undertaken. If not, they may not be undertaken. So in essence, I'm trying to say the figures on page 14, they are estimates based on a medium term. You can consider it also a long-term plan. I don't see us borrowing $80 million for those projects. And the Dows project is a typical example where we have $12.563 million approved on borrowing bylaw. But because of the decisions of both council and management, we're now at a position where we're considering $8.8 million. And management is also of the opinion, based on numbers that management have, that for the Dows project, we may not borrow that much. But this is the responsibility of management. It's to work on each project to try to identify funding, grants, reserve, and possibly borrowing, but to reduce the impact on the ratepayers. So I hope I answered your question, but we're not looking at $80 million of borrowing.
Good.
So this information is also for like our funding partners, because the financial plan goes to the province and they review it thoroughly, because the province is our number one, I can say, funding partner. We want them to be aware of the projects we're looking to undertake. And they are aware of these 3 projects. They've provided grants for the DAOs. They've provided grants for the rec center. And so we want them to be aware of the regional wastewater treatment facility as well. So that's why the $50 million estimate is there. And it says there on that page 13, borrowing subject to municipal board approval.
I think I want to clarify that the lagoon is showing the full 50 million project. We've applied for funding through Water Services Board, and then there's a Canadian Housing Infrastructure Fund that we're also applying for, and that would see the RM paying only a third of that cost if we were successful. So once we've applied for the grants and we know what we've received, then we will reduce that borrowing and show the other columns of the grants and reserved money that we have.
Any other questions from council? I see none. Then if we can. Oh, Amber, go ahead.
Yes, I just want to clarify one more thing, Mayor Pat. To council, for the financial statements that we present to council on a monthly basis, that council approves, from January to November, once we present a financial statement to you and you approve it, we don't make any change on that financial statement. No entries go into it from January to November. But the December financial statement, we're doing our year-end entries. That financial statement is the one that we still make entries into to complete our year-end process, even though we would have submitted it to council and council would have approved what we consider as a pre-public sector accounting standard financial statement. But the January to November, the statements you approve, there is no entry that goes into those statements after that.
Okay, then I don't see any other questions from council. Prepare to close the hearing, and I want to thank everybody online and in the audience for attending, and council as well. Thank you very much and have a good day. We're closing at 8:14. Thank you.